I mean, look, I view it as an overreaction. I mean, to me, if you look at AWS, strong. You look at ultimately guidance. I mean, guidance from a top line perspective, I view as pretty robust. I mean, I actually believe this is sort of the renaissance of growth that's about to happen at Amazon. I think, look, you're just seeing investors hypersensitive, but you look at overall big tech earnings, monster results from the Scotty Scheffler of tech, Microsoft. I mean, to me, I think it's just the beginning. I mean, look, we think Microsoft's going to be a $5 trillion market cap in 2026. And then when I look at what Nadella is doing in terms of the cloud strategy, I mean, those are Azure numbers that were beyond bull case. And I think ultimately investors, they're going to continue to try to find negatives here. When you think about the big tech growth story and the AI revolution, I mean, this is just the next phase of growth that's now going to the second, third, fourth derivative.
That was Dan Ives from Wedbush Securities, and he's not exaggerating. This past earnings week wasn't just strong, it was a resounding success. Despite a backdrop of inflation, rising interest rates, and recession fears, the world's biggest tech players showed us one thing: the AI revolution isn't coming, it's already here. Both Meta and Microsoft didn't just meet financial predictions, they far exceeded what Wall Street analysts expected. Meta's advertising platform, which is now enhanced by powerful AI targeting, led to a 22% increase in revenue compared to last year. At the same time, Microsoft's cloud services, particularly its Azure AI offerings, saw explosive growth, proving that AI is a reliable source of income and not just a trendy topic. Interestingly, did you know that Microsoft holds over 64,000 active patents, with a significant portion related to software and AI technologies, showcasing their long-standing commitment to innovation? Both corporations are continuing to invest billions in capital expenditures, not because they are struggling, but because they are confidently preparing for what's ahead, an economy where AI is the primary driver of growth. Industry experts like Dan Ives have called this a historical turning point for tech, while Cathie Wood has noted that groundbreaking innovation often flourishes in uncertain times. These impressive results are more than just headlines. They are clear indicators that even as financial conditions tighten, AI remains the most compelling investment opportunity of this decade. While all eyes have been on these tech giants, there was a third company that also shared its earnings this week. It's a stock that many have missed, yet its performance quietly supports the same positive outlook. This company's results reveal a significant trend that smart investors should pay attention to. In this video, we will break down the true implications of Microsoft and Meta's performance for the future of AI. We will also uncover this third, lesser-known company whose financial results might just surprise you. In a market where being confident in your investment choices is more important than ever, understanding these earnings reports could be your key to getting ahead of the next big AI wave. Up first is Microsoft Corporation, trading under the symbol MSFT. Their recent earnings report was more than just strong. It was a perfect example of how to lead during a major shift in technology. The company reported double-digit growth in both revenue and profit for the quarter and the entire fiscal year, thanks to its unwavering focus on AI, cloud computing, and helping businesses transform. CEO Satya Nadella was very direct, stating, "We are building the most comprehensive set of AI products and a technology framework at an immense scale." And the numbers back him up. Azure, Microsoft's powerhouse cloud service, grew by an astounding 34% year over year, pushing its annual revenue beyond $75 billion. Dan Ives even called these Azure numbers beyond bull case, and says Microsoft is on track to hit a $5 trillion market cap by 2026. That's the scale of what we're seeing. It's no longer just about storing data. Microsoft is providing an infrastructure specifically designed for AI at a speed that is unmatched. Every single Azure data center is now AI first, and the introduction of advanced liquid-cooled data centers shows that Microsoft is building the physical capacity to handle the most complex tasks in the world. But Microsoft's efforts go beyond just infrastructure. Their Copilot AI products, which are integrated into Microsoft 365, GitHub, and Dynamics, have seen a huge surge in use. More than 100 million people are now actively using these tools, and large companies are rolling them out to their entire staff. This is not just an experiment, it's essential software that is already changing how companies like Barclays, Adobe, and UBS operate. The message is clear: AI is not just a tool for Microsoft, it is a fundamental shift in technology, and they are leading the charge. Even with capital expenditures reaching over $24 billion this quarter, CFO Amy Hood highlighted that this spending is directly linked to a massive $368 billion backlog of contracted cloud business. Simply put, the challenge isn't finding customers, it's building the capacity fast enough to meet the demand. As analysts praise Microsoft for delivering one of the most comprehensive quarters in tech history, investors should take notice. Microsoft is not just a participant in the AI revolution, it's steering the direction. In a market filled with uncertainty, Microsoft stands out as a company that is operating with a clear plan, a strong purpose, and undeniable financial strength. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or investing in gold, I've got a free guide on gold IRAs linked below. Stick around, I'll go over why it's useful at the end of this video. Now let's turn our attention to Meta Platforms Inc., ticker symbol Meta, because Mark Zuckerberg just sent a powerful message to the financial world. Meta is fully committed to AI, and it's paying off. In the second quarter, Meta reported a remarkable 22% increase in revenue, topping $47.5 billion, while its earnings per share jumped by 59% from the previous year. The main reason for this success? AI. Meta's AI-driven ad delivery systems are setting new standards for effectiveness, helping advertisers precisely target users without hurting the user experience. It's a brilliant way to use AI for monetization that truly brings in money. This quarter's success wasn't just about ad revenue, though. Zuckerberg announced an even bigger commitment to Meta's AI infrastructure, increasing their capital expenditure forecast to as much as $72 billion for the year. According to Dan Ives, this isn't just smart strategy, it's part of the biggest tech shift in half a century. Meta's aggressive investments place it front and center in what he calls an AI arms race. This isn't just spending money, it's a strategic move. Meta is building new AI data centers, training its own core AI models like Llama 3, and positioning itself to compete at the most foundational levels of the AI industry. In Zuckerberg's own words, we're laying the groundwork to build general intelligence. And here's the most surprising part. Despite these huge investments, Meta's operating profit margin soared to 43%. The company isn't just spending, it's growing its profits at the same time. While the Reality Labs division is still losing money, the main business is funding AI development at a speed and scale that very few companies can match. Analysts are taking note. Some have called Meta's quarter an embarrassment of riches. Others have pointed out that Meta is now performing better than even the most optimistic predictions for AI-focused companies. In an economy that is still nervous about inflation and interest rates, Meta just proved that you can invest heavily in growth and still achieve outstanding results. This is not the same company that worried investors in 2022. Meta has found its groove and is now thriving on the beat of the AI drum. For long-term investors who believe in the power of large-scale AI, Meta has become impossible to ignore. Finally, let's look at the third stock, SOFI Technologies Inc., ticker symbol SOFI. This company may not be as prominent in the news as Microsoft or Meta, but it just delivered one of the most underappreciated earnings reports of the week. In the second quarter of 2025, SOFI announced revenue of $858 million, an impressive 44% increase year over year, comfortably beating both revenue and earnings per share forecasts. But the most important part is the story behind the numbers. SOFI has been quietly moving its business away from lending, which is sensitive to interest rates, toward a more flexible fee-based financial services model. This strategic shift is now paying off. Financial services now account for nearly 40% of its total revenue, a huge jump from just 2% 5 years ago. And the profit margins in that segment have grown from 31% to 52% in just the last year. The company's focus on crypto is also gaining attention, with plans to add stablecoin services over the next 2 years. With almost 30% of SOFI's members already owning crypto, the company is positioning itself at the crossroads of financial technology, fintech, decentralized finance, DeFi, and modern banking. This move could create new, highly profitable and scalable revenue streams that will distinguish SOFI from both traditional banks and its slower fintech rivals. However, SOFI isn't completely abandoning its origins. Lending is still its most profitable division, contributing $245 million in the second quarter alone. Importantly, its net charge-off rates are improving, which shows that its loan portfolio is healthier even in a high interest rate environment. In an economic climate where interest rates are still high and there are ongoing regulatory risks, SOFI is demonstrating that it can successfully diversify, adapt, and grow profitably. While Meta and Microsoft are leading the conversation around AI, SOFI is discreetly building the infrastructure for the financial services of the future, designed for crypto, driven by fees, and built for the digital world. For investors looking for exposure to AI, fintech, and digital assets, SOFI's Q2 results point to one thing. This is more than just a comeback. It's the beginning of a new phase of growth. In a week filled with a lot of noise, these three companies, Microsoft, Meta, and SOFI, cut through it all with impressive clarity. They didn't just exceed expectations, they provided a roadmap for what's to come. Microsoft is expanding AI throughout the corporate world. Meta is transforming AI into actual profit and using its spending as a competitive advantage. And SOFI is redefining financial services with a new, digitally native model that incorporates crypto. If you're still wondering whether AI or fintech have lasting power in this economy, just look at the numbers. These are no longer just hopeful ideas, they are well-executed plans. So the real question isn't whether these trends matter, but whether you're ready for them. The stock market's been jittery lately, and when uncertainty rises, history shows us where smart money tends to go: gold. Central banks' demand for it last year alone reached a record high, and spot gold just surged past $3,300 an ounce. And recently, it has surpassed the Mag 7 as the most crowded trade on Wall Street. If you're thinking about ways to take advantage of gold in your investments, I found a company that gives Americans a free guide on how to add real physical gold to their retirement portfolio in a way that's simple and secure. No sales pitch, no pressure, just honest, helpful information you can trust. Click the link in the description to get your copy now, because when the biggest financial institutions in the world are quietly stockpiling gold, it's not just a trend, it's a signal.